Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders. The title of the video is Trading S&P 500, Standard & Poor 500, Tips and Tricks. Trading S&P 500, Tips and Tricks. Let's get started. Now, I want traders to pay attention carefully to what I'm going to say to them. This is because if one is trading S&P 500, one is competing with the best traders out there. The hedge funds, the banks, the big institutions, the pension funds, okay, the smart trader, the high frequency traders, okay. If one is trading the S&P 500, one must be very careful, all right? Very, very important. The next thing I want to say to traders, if one is trading the S&P 500, one must constantly look for the setups around key levels. All right, key levels. All right, because the professional will not enter the trade in a void. They will trade around key levels. All right. One example of a key levels, for instance, we on the yearly chart, the high, the low, okay, the closing price, the median line, okay, of a candlestick bar. These are key levels. So we can draw the high, the low, the opening price, the closing price, and the median line of a candlestick bar on a weekly chart, even on a daily chart. I would prefer weekly chart, monthly chart, quarterly chart, and yearly chart. Professional, we trade around those key levels, all right? They will also trade around the Fibonacci levels, Fibonacci extension, Fibonacci retracement levels, all right, and the normal support and resistance level. You can see here on the yearly chart, the price went up to this point and changed the direction. The red line here is a key levels, okay? See it as a zone. Do not see it as a thin line, see it as a zone, all right? Very, very important, okay? So again, it went down here, okay, and changed the direction. This level here, the green line here, is a key levels, okay? So as the price retesting that key level for the second time, here, this is a setup. You see professional bought it here. Here they sold it before at this key level. Price return back to the same level, they sold it again. You can see this candle here, price come near that level, they sold it. You see we on the yearly chart, they sold it before they bring it back up, all right? So now we are in uncharted territory. We can use, you see, if the price bullish, what do we need to pay attention to? To the high. In the uptrend, we are watching the high. The price must display higher high, higher low. So because we are on the yearly chart, the price now above the high of 2013. All right. This is what I was saying to trade at the beginning of the year. So beginning of 2014, the price found a resistance there, tried to go down, but quickly return back above it. All right. So now we have the price above the high of 2013. It's bullish. So we can go now to the monthly chart, quarterly chart, weekly chart, and we are drawing the high. Because it's bullish, we want it to find a support above the high. I'll prefer the high of the weekly chart. All right? So we take it from the high to the next high. That's how the price will go up. We are also watching the median line. Okay? The next thing I need to say to traders, if one is trading the S&P 500, one is trading the market. All right? So though we are looking at the market itself, all right, we must understand the engine of the market. Okay, what I like to call the engine of the market is the first thing that compose the engine of the market is what we call the market leaders. Google, Apple stock, Boeing, okay, ExxonMobil, okay, these are market leaders. If you want to know more about market leaders, go to www.dayprotrader.com, click on Market Watch, all right? So these market leaders are one of the engines of the market itself, okay, the S&P 500. Apart from the market leaders, we also pay attention to what? The economy news, all right, the economy news, the general economy news concerning the economy in the United States, in Europe, okay, in Asia. This is another engine of the market, okay? The third engine on the market is the fundamentals. Now, the fundamentals we can refer, because we are talking about the S&P 500, we can talk about the earnings. So recently was the earnings season in the United States. When the company are releasing their financial statement, we want to pay attention to the earnings, okay, the fundamentals, doing what we call Google Assist test, at least for the market leaders, all right? Because they are the engine of the market, and also we pay attention to the general earnings, how many company, okay, beat the analyst earnings. This is very, very important if you are trading, okay, the S&P 500. Another thing that I need to say to traders, which is very, very important at this juncture, is that the policy made by the central banks will also affect the market. Recently, all right, the Federal Reserve has stopped the quantitative easing. They have stopped printing the dollar. They have stopped devaluing the dollar. Now, when they started in 2009 printing dollar, devaluing the dollar, okay, this excess of money printing went to the stock market, and the S&P 500 was going up since 2009 up to now. Now that they have stopped, okay, the quantitative easing, a lot of traders want to sell the stock, but I think it's a mistake. All right, why is a mistake? In my view, the market will become bearish in 2016. All right, I will not tell you why. It's about the market cycle. People will try to sell the S&P 500 are selling it prematurely. We may see a bearish momentum starting from around July 2015, heading to 2016. So that's my personal view. I may be completely wrong. Don't take my word for it. But that's my view. I need to share it with you. So some traders will try to sell it now. Yes, because, okay, they have stopped quantitative easing. That was propelling the market up. Now they have stopped. Yes, we will see a bit of move to the downside, which we have already seen on the daily chart. But remember, the market always is about a cycle, okay, trend, all right, a mini cycle. So traders need to be very careful if they are selling the S&P 500. But apart from everything else, we can also use the technical analysis. Let's go back now to the technical drawing. All right. On the yearly chart, ladies and gentlemen, we see this consolidation here, okay, when the price is oscillating between two levels. You see the green horizontal line here, it went up to the red line, come back to the green line, went back to the, okay, red line, and come back down again to the green line. It was oscillating here. For traders who understand the Elliott wave and the first Elliott wave particularly, all right, you need to understand that we use what we call market geometry. When we see a consolidation like this, all right, especially on a higher time frame like a yearly chart, if the price break above the consolidation, we will project the size of the consolidation to the upside. You see, this is what we call market geometry. So the price oscillating between this zone, the green line, so that's the size of this horizontal channel. If the price goes above it, we will project that channel to the upside. If it did below that level, we project it to the downside, setting our target somewhere here. Now, because the price went above that consolidation zone, we will project it to the upside. As you can see on my chart, I do not have room to show you where that level ends. So what I've done, I divide my original horizontal line into two. So you see here, so that's the first level, that's the second level. So I'm using my measuring stick. If you accept that, it's my measuring stick. That is the half of my original horizontal channel. So because it went above it, my okay, mini target, so to speak, is the green one here. Okay, now it went above it, I will project it to the upside. Now because I cannot see on my chart, I can still calculate it. Okay, I can calculate that because I know the price move from the red line to my mini targets, okay, is 300 pips, 300 points, okay. So I will add 300 points to the level of 1797. Okay, this green line is in the zone of, don't pay attention to this one here. It's in the zone of 1797. So the ultimate target, This is very important for you to know because you are trading against the professional. If you are trading S&P 500, the ultimate bearish zone for the S&P 500 is at 2097. Please note it down if you are trading E-mini or you are trading American stock or you are trading even Forex, because talking about the trading triangle, we have the market first, then the sector, before the individual financial instrument. All right. So we are constantly paying attention to the market, which is the S&P 500. All right. So what is affecting the S&P 500 is indicating the market sentiment. All right. So because the market is global, we are constantly watching the S&P 500. There are more to this. If you want to know more, go to the Pro Trader, click on Market Watch, where I'll explain to traders, okay, the trading triangle. All right. Also, there is a video on YouTube about market trading triangle. Ladies and gentlemen, hold on a second. I need to pause this video, and I'll come back to you in 1 second. I need to drink, okay? Thank you, traders. So the ultimate target for the S&P 500 is 2097. The price right now is at 2023. All right? This is very, very important. Also, apart from the horizontal channel here, we also have, okay, this Pitchfork tool. If you want to know more about Pitchfork tool, go to www.dayprotrader.com, Pitchfork tool trading, or subscribe to our channel, Day Pro Traders YouTube channel. Here it is, all right? So I draw my Pitchfork tool roughly here. You can see I draw it roughly here, but it's beautiful. You can see that, pay attention carefully. I'm going to remove my, okay. You see the Pitchfork tool is, we have a bigger channel. You see the brown channel, all right? The median line is this one here. And I also divide the top mini channel of the Pitchfork tool. You see, that's the blue line here. As you can see, the price pull back near the median line of that top part of the Pitchfork tool. If you are with me, that's the median line of the top part of the Pitchfork tool. And the price came on the near the median line, found a support. Now it's going up. It's on the edge of the upper side of the Pitchfork tool. Now, another thing that we can do at this point in time, it's not easy to do it like this on this chart. I can project my Pitchfork tool to the other side because the price went above it now, all right? Okay. The reason why recently traders sold the S&P 500 is because it came near the edge of the upper side of my Pitchfork tool right here, on the edge, all right? Trading on the edge, go to stochasticmarket.com, all right? Now you can see here, so the price went above it. You see, this is my Pitchfork tool, the upper side of my Pitchfork tool on my daily chart. All right. But on a daily chart, I want you to pay attention to something here. Okay. Pay attention to the trend line here on a daily chart. Okay. This trend line that I draw now. I have too many lines now. So, but pay attention carefully. I'm going to color in turquoise. Okay. That's the line, you know, drawing this point and this point here. Allow me to draw my trend line here. So if we draw a channel, to draw a channel, I will just need one point at the top here to make it parallel to my turquoise line. Okay, so I have my channel. Accept it like this, okay? I like to do that roughly, okay? That's it, that we have a channel in place. I can also go on my daily chart still. It's my chart. I can draw on it, do exactly the same thing. We have a kind of, okay, I'm drawing the median line of my channel. If you accept that, okay, that's my median line. So right now, trader must watch the price coming near the median line on the daily charts, okay? What has happened here? Trader need to be very careful because you see the price was displaying higher lows, higher high. You see there was a low, higher lows, higher low. Here the price want to display a lower low. It's bearish. This information here is bearish, right? There was a low here, but the price did not display a higher low. When it come here, it failed to find a support and display a lower low. This is telling us that some people are selling. Do not forget what I just said now. Do not forget that on the daily chart. But the price did not, so far, after displaying this lower low, if we had a lower high compared to this high here, if we have a lower high compared to this high here, and the trend line is broken, then we have a bearish setup. I did not say a bearish signal, I say bearish setup. Bearish setup, then we wait for bearish signal, and then we look for, okay, a low risk entry point. All right? But now the price continues to go up. As I tell you now, some trader will try to sell it, but be very careful if you are selling it too early, because the market may prefer to push it up, at least up to July 2015, and coming to 2016, we may see more, okay, profit taking. All right, it may not be fundamentally bearish, but it may just be a profit taking or outflow of money out of the stock market into other, okay, a sector of the market. All right, so be aware of this low. This low is bearish because it's a lower low compared to all this low here. And now watch it carefully. It may go up above this high, but if it come back down and final and break the trend line, the common sense trend line here, that will be a little bit bearish. But remember, we don't want to go too bearish against the S&P 500 before mid-July 2015. All right. All right, be careful. Okay, if you are selling it, be gentle. Be gentle. All right. If you go to the weekly chart, ladies and gentlemen, I'm going to remove my lines, some of my lines, so I don't have too many lines on my chart. So this is about a daily chart. Okay, so far it's bullish. Another thing I need to say to traders that are day trading. So we have okay, so this level here. Okay, so as long as it stays above the level of 2000, okay, we can give it priority to bullish signal. Okay, remember, priority to bullish signal above 2000. If you come back below 2000, that will be bearish. Okay, but so far, if you want to day trade on the edge, okay, above, okay, 2000, the level of 2000 in a rising channel using the trading drill. So do not forget the level of 2000, okay, on a daily chart. Okay, do not forget that. Okay, all right, it's above it now, but watch it carefully. Okay, if it's going up, you display high lows, high, either on the 50-meter, 10-minute chart, hourly chart, you will see it. And you want the pullback on the edge, okay, and then you take it from there. The channel that I draw on the daily chart do exactly the same thing, and also draw the media line, okay, so you may trade on the edge like professional traders. The level that I have also mentioned to you, do not forget it. There's one level here on the daily chart, the level of 2000. All right? Going to the weekly chart very swiftly, ladies and gentlemen. I don't want this video to be too long. On the weekly chart, okay, what's happening here, okay? There was a trend, and then the price pulled back. Now the price is going up big time, okay? Professional in this scenario will also use what we call the Fibonacci patterns. I got 2 minutes, ladies and gentlemen. I'm going to wrap it now soon, all right? So professional will also use Fibonacci, okay? Extension to determine okay, hidden support and resistance level. All right. So the level, we are the price now at the level of 150 Fibonacci extension zone for the S&P 500. All right. But traders must be aware, because I can't see everything on my weekly chart. Okay, you see still 150. We are in the zone of 150. If I go to the quarterly chart, I'm running out of time. Not much I can see. So all I will say to trader must pay attention, okay, to the level of 261% Fibonacci extension zone. Okay, these are the level I want you to watch. The 161% Fibonacci extension zone on the weekly chart, and also the 261% Fibonacci extension zone. These are possible reversal zone. All right. I hope you have learned something from this video. The way I draw my Fibonacci extension, you see on the weekly chart, this section here, okay, down, okay, from 2007, you see here, down this section on the weekly chart. From here down, use the Fibonacci extension to highlight the level of 161% and the 261% on your chart. You may have to calculate it manually, so you may determine the possible reversal zone. As always, when we are trading, we want to use the market pattern, the rising channel, the declining channel, and the horizontal channel. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders. Thank you for watching, and I will speak to you very soon.